Welcome to the Contrarian Investor Podcast. We give voice to those who challenge a prevailing sentiment in global financial markets. This podcast is for informational purposes only. Nothing on this podcast should be taken as investment advice. Guests were not compensated for their appearance, nor do they supply payment in order to appear. Individuals on this podcast may hold positions in the securities that are discussed. Listeners are urged to educate themselves and make their own decisions. This podcast episode may have ads and the occasional announcement. To listen without ads or announcements and take advantage of a host of other benefits, consider becoming a premium subscriber. Visit the website contrarian.supercast.tech. That's TECH for more information. Now, here's your host, Mr. Nathaniel E. Baker.
Robert Smallwood, also known as the Contrarian Capitalist, on Substack. Of course, with a name like that, you caught my attention. We are recording this on Thursday, March 13th, 2025, during a time when a lot of pessimism appears to have taken over the markets and bearishness. Talk about recession. Some talk about stagflation. Stocks are doing pretty poorly across the board. There's some volatility, but you aren't buying this pessimistic / bearish narrative completely, right?
Yeah, that's correct. First of all, thank you for having me on the show.
Thanks for coming on.
Always appreciate these level of conversations. I'm personally not buying it, and I'm not just saying that from a contrarian point of view. I'm not trying to be difficult for the sake of being difficult. I think if we look at what's at play in terms of the longer term game, I'm not going to deny that there's going to be a very nasty recession and crash at some point. So I'm not here to say it's all, green fields and leprechauns and pots of gold. It might be for the next few months, maybe, but bigger picture, yeah, there has to be something that happens. But at the moment, it's too bearish for me. Too bearish for my liking. There's a lot of things at play. What does the current president of the USA want? What's he actually trying to achieve? And of course, I think we're all used to what politicians and their teams say and do are two different things. So you have to look at the long-term perspective and try and take the politics out of it, which I know is easier said than done. You can tell from my accent, I'm not a citizen of the United States of America. So I'm trying to look at this, as objectively as possible. But no, I'm just not buying it. I do think we're going to head for a blow off top at some point. And after that hits, yes, then I would say, yeah, okay, it could get quite nasty quite quickly. But that's my point of view at the moment.
Very interesting. What are you basing this on, this optimism? You just think we're oversold? Is there any economic data you point to?
So what's fueling my thought is if you look at like your basic indicators, RSI, that sort of stuff, that's pretty much heading to the basement at the moment. Now, normally you would suggest or you would indicate that, that should turn around at some point. Now, a lot of people will argue, well, yeah, that's going to create a mini bounce and then it's down and down again. Fair enough. It's happened before. Could happen again. Don't know. So general sentiment, not good. RSI, yeah, looking at very oversold on the major indices at the moment. Stocks, generally, last 2 weeks of February, first 2 weeks of March, roughly the last, month we're talking, generally, they don't do well. It's seasonality as well. They don't do well in that time of year. What doesn't help is things like tariffs and so forth. Yeah, there's a lot of news out there. But if you look at the fact that the USA or the US has got to, refinance between 8 and 10 trillion in the next year or two. Now, if that's going to happen, what's better for that to happen? Well, the conditions that you're going to need are better yields, better bond yields. Well, if you're going to get better bond yields, what you need to do is create a little bit of uncertainty, get some of that area out of the stocks, get some of that, inflation out of the stocks, so to speak, and work on the bonds. Now, that's where I come from. Look at what Donald Trump might want. Is it to refinance a large portion of the US debt at a lower rate? I think that's the case. If that's the case, then what they need to do in order to get those rates lower are to look at creating a little bit of turbulence in the stock market at this point of time without trying to crash it, which again, I don't think is going to happen, but if I'll live and die on my sword if I have to, because they're looking at those bond yields. Now, the minute that debt's refinanced, then all hell could break loose. It could, whatever could happen. But that's my theory at the moment. So yeah, general seasonality, looking at a couple of basic indicators in terms of indices. And yeah, just what's the Buffett phrase? Be fearful when others are greedy and greedy when others are fearful. There's a lot of fear out there at the moment. Yeah, I'm not saying go all in and go and buy stocks and buy the dip. It could get a lot worse. But when I look at what they're trying to achieve, or what I think the president and the government of the USA are trying to achieve, I think it's probably trying to get a lot of that debt refinanced at a lower rate. And if that's what they're after, then you have to say they're on the right track. Whether you want to like it or not, or agree to it or not, they're on the right track, in my opinion.
All right, that's interesting. Yeah, so it sounds like you're kind of in the camp of those who are saying Trump wants to create a recession or something to push the yields lower, and also to get the Fed to cut more, possibly, ideally.
Yeah, absolutely. Whether they're going to do that in March, I think there's a lot of indicators out there that say that is very unlikely that that's going to happen. But as you say, we're talking on the 13th. That meeting's the 18th, 19th. A lot can happen between now and then. Next one's at the start of May, I think. And yes, I would, if it's not next week or in March, then possibly in May. But these are the things that we have to take into consideration. And ultimately, if the aim is to refinance that debt at a lower rate, then they're on the right track. And that forms the basis of my theory anyway.
Fair enough. When does the debt come due? Is it all on a certain date, or does it go rolling throughout the year? Do you know how that works?
That I don't have that information to hand. All I know is I think it's between
No,
eight
it
and
would be on
10
a rolling
billion.
basis because it's based on the auctions, I would think, right? Yeah.
Yeah, I don't have that exact data to hand, but that's a good question. I'm not able to answer that one right now.
Okay. Fair enough. Okay, so more upside in equities. You mentioned Europe and the UK. That's been one bright spot here this year. Do you see that continuing?
Possibly, unless the EU gets its way and drags everyone into war, which it looks like they want to do. I'm sure listeners will have picked up on my British accent. So I am native born England, and there's a lot of crazy stuff going on back at home at the moment and across the EU. Do Can the indices, like FTSE 100, DAX, for example, can they keep going up and keep soaring? Yeah, absolutely. If the EU's going to, convert, what was it I read the other day? 10 trillion of private savings into investments. That should set alarm bells ringing anyway from a contrarian point of view. That's not healthy. That's not good. Can the stock indexes go up higher over there? Yeah, they can. If all hell breaks loose, and it seems like they're hell bent on it, if it does, then there's a lot of caution there to be had. But I would say take war out of the equation, hypothetically. Yeah, they seem to be relatively undervalued in comparison to the US indices at the time of recording.
Very interesting. Huh. Any thoughts on China and the Far East? China's also been doing very well this year.
Haven't read too much on China. I know that I interviewed Trader Ferg recently, and he's got a large portion of his portfolio in Chinese tech at the moment. It's not a market I know a lot about. I think like most places, trying to trust the data that comes out, it is difficult. But China, again, whether or not you like their policies or what they're trying to achieve, they're very technologically advanced. They always are playing the long game politically. And I do have a friend that lives in the south of China near Hong Kong. And some of the photos I've seen from him about just day-to-day life is just, I think, absolutely incredible in how technologically advanced they are. So I couldn't tell you too much about their economy in terms of numbers. I know that there's been issues in housing, but again, look at the advances they're doing in nuclear technology using thorium reactors. I think they built a nuclear plant or some form of power plant in the middle of the Gobi Desert. It doesn't need water. I mean, mind-boggling, I think, for us lot. But they've done it apparently, and it's working fine. So a lot going on, but again, I don't. It's not an index I pay a lot of attention to be fair.
Fair enough. Okay. I think this is a good time to take a quick break, but I want to come back, ask you more stuff. Firstly, like how you came about to start this whole contrarian capitalist service, what that even means, and some other things, drill down into the markets a little bit, other sectors and things like that. But we'll first take a short break. If you are a premium subscriber, you will not get the break. Do not touch the dial. We'll be right back. In fact, we already are. Everybody else, to become a premium subscriber, visit the website contrarianpod.substack.com and sign up.
We hope you're enjoying this episode of the Contrarian Investor Podcast, where we give voice to those who challenge a prevailing narrative in global financial markets. Consider becoming a premium subscriber. For $9 a month or less, premium subscribers receive a number of benefits. Podcasts are posted immediately after they're recorded. Transcripts are made available within 24 hours. Premium subscribers get direct access to the host, and of course, there are no ads or interruptions. Visit contrarian.supercast.tech for more information.
By the way, you don't need the .tech suffix to get to that website. .com will do the trick. And we also have a Substack where you can sign up for the same prices, same benefits, same details, contrarianpod.substack.com. So if you already have a Substack account and use it, or have the app and use that, that's probably the best way to go. So contrarian.supercast.com or contrarianpod.substack.com. Whole bunch of benefits, including, of course, getting this episode up to a week early without ads or annoying announcements. And you also get the daily Contrarian briefing and podcast that is released every market day morning at 7 a.m. This is a Contrarian take on the events of the day ahead and what is likely to move markets, such as economic data releases, earnings, and other things. It is really good, and that is completely unbiased, of course. So check that out, contrarianpod.substack.com or contrarian.supercast.tech. Now on with the show. Here with Robert Smallwood, also known as the Contrarian Capitalist on Substack. Robert, this is the segment of the show where we drill down a little bit into our guests' background and ask them how they came to invest in the first place and what transpired to find them at this current station in their career. So curious, I call this the origin story, stealing a term from Marvel. But curious, how it all started for you and what happened to get you here now and how this whole lent itself to the Contrarian Capitalist.
Oh, no, thanks for the opportunity for allowing me to explain. So without rolling too far back, what I'll do is in 2020, obviously a lot of crazy things were happening around the world. Like most people, had quite a bit of spare time on my hands to start thinking, start looking around. And from there, it just I first read and watched Mike Maloney's series on gold and silver. I just came across it on YouTube, and that really got my brain thinking. That really got me thinking a lot about not just gold and silver, but macro in general, what's going on. Then you start getting down the whole rabbit holes, propaganda and how history shaped, etc., etc. So for me, realizing who I am, I always like to be, I'm different in general, always have been, always will be. So that, a bit of a contrarian nature there anyway. So from there, it was a case of, digging down into it. And the more I dug into it, the more things didn't quite add up. It's like doing 2 and 2 and making 10. It just doesn't make sense. And from there, ironically went back to work. So I used to be, still am a surveyor, to be fair, building surveyor. That's my job. That's my bread and butter. But family circumstances, my wife is Mexican, so I moved to Mexico at the start of 2025. So it was that change, getting out of full-time work for doing building work, etc., to then really putting time and effort into Contrarian Capitalist, because it was a case of having more time, more consistency to have these sorts of levels of conversations, looking at the markets, looking at things like gold, silver, what's going on, and trying to create what I like to call a plan B. Like life doesn't just have to be in your country. There are other things out there. So it's to really share that experience with others, add value in terms of, look, if I can do it, you can do it, sort of thing. But really also how to protect yourself from things that are coming down the line. And the dark subjects, when you look at EU coming up with, central bank digital currencies, all that sort of stuff, the typical globalist play, I'm not a fan of that sort of stuff. And I think that's going to catch a lot of people off guard. And you can protect yourself. You can make of your life what you want. Hence, in the last 6 months, that's where a lot of work's been put into Contrarian Capitalist. And I now have more time to do that as I have, changed country and so forth. So, yeah, that's without giving the whole history, that's really the last 5 years and how we've ended up in this position.
Oh, that's really cool. Really interesting. And so the asset classes that you track the most are gold and silver. Is that right?
Yeah, in terms of physical positions, yes. I always say there's a bit of a conundrum when you're looking at markets. For example, gold and silver. Gold and silver position, it's there, it's away, it's locked away, it's in storage, it's in a different country. I don't think about it. The price doesn't keep me up at night because it's a very long-term play on physical gold and silver. Now, if I'm trying to trade the markets and try and, be a bit cheeky and trying to, get in and out, up and down and so forth, the mentality is completely different. And that involves looking at things a little bit more. For example, gold is what, 29.50, give or take, at the moment, at the time of recording. Is it going to hit 3,000? Yeah, more than likely it will. Is that going to happen in the next couple of days? I don't know, because there's so many different things at play. So if you're trying to trade it and trying to trade the paper, difficult. If you're having a physical position, I sleep well at night for that because it's a very long-term play. So yeah, it's nothing I say is investment advice. I always make that disclaimer.
We have the disclaimer at the front anyway, so yeah.
It's I can only say to people what I'm doing.
Sure.
And again, that all came from 2020, looking at what's going on, looking at what was likely to come further on down the line, and then making the long-term play. So that's where the physical position comes in.
And you say physical gold, so you actually mean collecting the gold bars or whatever it is, and holding it in a vault somewhere or something like that.
Yeah, absolutely. And again, it's just part of the long-term plan. You do it for however many number of reasons you want. Is it an inflation hedge? Do you want to get out of the currency system and so forth? I wrote a while ago that one of the reasons I done it was that there could be a monetary reset. Now, of course, we've seen talk in the last few months from Scott Bessent and so forth that they're looking to monetize the asset column. Now, that could mean a revaluation of gold. It might not. I don't know. That wasn't the main reason I'd done it. But if you wake up one day and gold has been, magically revalued and it's now worth, I don't know, $15,000, that's just a random number I've plucked from thin air, then that's great if you're holding a position. But that wasn't the main reason, but that was one of the reasons. It's a long-term play, the physical.
Very interesting. One of the things that we hear about with inflation hedges, rightly or wrongly, is cryptos. As yourself, a contrarian, do you have any thoughts on that asset class?
I would say that there's a lot of good qualities to Bitcoin. I'm not a guru by any stretch of the imagination. It's something I've started to look at a lot more and try and understand a lot more. So I understand that there's a scarcity factor. I understand that it's incredibly volatile. And there's been a few pump and dumps, should we say, in the last few weeks. So does it have a position, or does Bitcoin have a position in the very long term? I would say probably yes, but I'm still trying to build up my base case and my theory on that. I'm just getting started in terms of the research on that.
Interesting. Fair enough. Okay. And how do things like equities and bonds factor into your thinking here?
Well, if we go back to what we said at the start, I know that if you look at the S&P 500, for example, down, call it 10%. Roughly, it's been quite a violent sell-off as well in the last couple of weeks. So I look at that and looking at the seasonality data, looking at what I think Trump wants and looking at how that might play out. I think there's too much fear in there. So I would look at onwards and upwards for the stock market personally. and I know I'm in the minority. And if I get proven wrong, I get proven wrong. So be it. But I think there'll be a blow off top. I think there'll be a blow off top, probably across the board on quite a few things, not just the major industries, possibly gold, silver, etc. But when that recession does hit, and we're going to know about it, I think that's going to be. I've seen a lot of people say it could be worse than 1929. Yeah, maybe
They
so.
always say that. Yeah.
Of course, when it hits, I think that's going to take a lot of people by surprise, and that's where you're going to see, a lot of fun things moving forward. That's going to create a lot of opportunity to buy. Just look at Buffett. He's set on 330 billion worth of cash. He's a smart person. Why do you think he's doing that? But I think it's that's what I'm looking at. I think onwards and upwards, blow off top, then look out below. Personally.
Interesting. And you said we'll know it when it's happening. What kind of things will make it obvious? Is there what kind of indicators do you use to look at, or is it just the price movement?
I'm just going to look at the sentiment, look at what people are saying, look at what people are doing, look at where we are in the year as well. To be honest, again, go back to politics. If there is a massive, major recession happening, right now, right here, right now, if you look at politics, that's probably going to hand the House, I think it's probably going to hand the House back to the Democrats. Do you really think Donald Trump and team want that? Because then he'll be a lame duck for the last 2 years. I personally don't think that's going to happen because they don't want that to happen. I'd be looking at sentiment. I'd be looking at all those sorts of things. But then at the same time, if you position yourself accordingly, you've probably got not a lot to worry about, to be fair.
Very interesting. All right, Robert Smallwood of the Contrarian Capitalist. Thank you so much for joining the Contrarian Investor podcast. I was there first. No, I'm kidding. I don't care. I was though. I think I started in 20. Whatever, doesn't matter. But are you in Mexico City?
Yeah, Mexico City. Yeah, right in the middle of Mexico City.
Lovely, nice. And maybe tell us more about. I mentioned the website. I don't know if you're active on other social media. And what exactly does your service offer? Can you tell us about that? And I'll put all that information in the show notes as well. Again,
appreciate the offer of letting me explain. So contrariancapitalist.substack.com. So a lot of the work is done at Substack. You can find me at X. I think that's ContrarianRob88. Now, I am on LinkedIn as well, but I don't really use that an awful lot. Based in Mexico City now. I recently moved at the start of 2025. And Contrarian Capitalist, what does that do? I basically go out and do the hard work so you don't have to. So I look at all the markets, look at as much as I can, try and come up with plan Bs to help you get out of all this tyranny that's going to happen or is happening. So it's really just to help you to protect yourself, diversify yourself, and to come out of, if there is a wealth transfer happening or whatever, and things do go horribly wrong, chances are you're going to come out the other side shining rather than, being on the wrong side of the trade. So that's really what the service does. And I'm glad to say that more and more people are becoming, free subscribers, paid subscribers, founding members, etc. So it's really good to see the community growing. So people that's go and check it out.
That's fantastic. And you've been able to grow it on Substack, between Substack and X, and word of mouth?
Mainly Substack. That's been the main focus. Yeah, mainly Substack, partnering up with people, obviously, podcasts like, this one as well. And mainly it is Substack at the moment. And the podcast helps, as you know. So again, if you don't want to check out Substack, but want to hear the podcast, go to iTunes and so forth. Yeah, sure. Contrarian Capitalist, check it out there. But it's mainly Substack at the moment, and it's working well.
Very cool. All right. Well, thanks again, Robert, for coming on. Very interesting conversation. Thank you all for listening. And we will be back here again next week with our next guest. Speak then. Bye.
Thank you for listening to the Contrarian Investor Podcast. We hope you enjoyed this episode. To subscribe to this podcast, simply open your favorite podcast software and search for Contrarian Investor. Follow us on social media by searching for Contrarian Investor on Twitter and Instagram. Send us your thoughts on feedback@contrarianpod.com. We look forward to speaking to you again next time.